right. So we do have Segway on. So just get all the guys brought up on stage. What's up,
Look
guys?
at that, the full squad.
Hey,
Wow, GM.
GM. You guys can hear me all right?
Yeah, we can, and that's some high quality camera you got going on there. Oh, look.
You never watched the Trench Report? Come on, man.
Am I missing out?
Yeah. Come on, man. Yeah, man. I've been in the Believe ecosystem since bro. I owned probably every single Believe token for like the first month and a half. I'm talking like every single one. I made a comment on your Twitter yesterday, and I was like, "Yo, bro, I owe you money because like I forgot I had Dira in my wallet." I'm like,
dude.
I'm like, "Yo,
let's go."
Dira popped off. I'm like, "Oh, dude, I have everything I've ever held. I don't think I sold one. I've got like Clune in there. I've got Tweet DM. I've got Prompt, Kled. Dude,
He's in there,
bro.
I love that.
I own so many. I mean, for the first month and a half, I mean, Yapper. I mean, dude, Startup, Dupe, of course. Like I've owned them all. So like, I'm very, very aware of the ecosystem, and I'm pumped on what you guys are doing. I think it's great for the space.
Sweet, man. Well, we're pumped on what you guys are doing, and we're excited to hear a little bit more because I saw Trent. I think it was you who kind of got a little spat with Maya just standing on this Segway hill talking about, you know, why Segway is going to maybe be better than Street, just whole back and forth. We're going to get into that. Maybe, I guess we have to start with breakdowns, like you guys, backgrounds, how you guys came together. We got to start there, right? Yeah. Trent, you want to go ahead and lead us off?
Yes. So I have an MBA in finance. I went to Drexel. I'm from the Philadelphia area. I live about an hour south of Philadelphia. I come from a traditional finance background. I had a Series 7 at one point. I'm not sponsored anymore, obviously. I worked in TradFi for like a literal whole year, and I hated it. And then I ended up going corporate, and I was a controller at Johnson & Johnson for a while, which is like a senior accounting position. And then I was there for a while, and then I started a recruiting company with my brother that did really well. It's still operating today. And then I got full-time into Web3. Like I got in 2018, and then I went full-time in 2020. I never looked back. So that's kind of like my journey into Web3, but lifelong builder, entrepreneur. You know, I'm always diving into stuff, but as of recently, you know, I started from a DeFi pass. I got really big into DeFi summer. That was really what was like, that was where I made the life-changing gains. Like that was where like the DAO craze was really where like my life really changed. And then, you know, kind of trudged through the bear market for a while. And then I got into meme coins reluctantly back in 2024 because, you know, like everyone was like, dude, come over to Solana, bro. You got to come to Solana, you know, like come on over. And I was like, oh man, I'm not doing this, bro. Like I was just like unking it real hard. Like I didn't want to like go over, and I'm just like, all right, cool. So I started trading them. You know, this was pre-pump fund, and I'm just like, you know what, I'm all right at this. I'm not bad. And then pump fund hit. I'm like, okay, this is like a whole movement now. So then that's when I created the Trench Report. Right, like last September, I think it's been around a year almost. Yeah, about a year. I think the channel's been up. And I was really big into covering like that first AI wave was really, really big for me. Like that's what I was covering really, really hard, was like all those first initial AI projects, like Goat, and then you had Fartcoin, and then all the other ones that came with it, like Mother and Kira, dude, all of them. And we held supply too.
Good times.
Like, yeah, those are good times. And then, you know, it just kind of chilled out. Believe hit. That was cool. And then I shifted over to perps. Like I went really hard into perps. So, I started trading on Hyperliquid like religiously. And I took what I learned from memes and I brought it over to perps, and I did really well on Hyperliquid. I'm actually a top 25 Hyperliquid trader, but retired. So
why is that?
I didn't like what I saw on 1010, man. I'm not gonna lie to you, dude. Like I'm in a private group with some of the biggest perp traders in the world, and many faces and names that you guys would know. And it was bad. It wasn't good. It was like, you know, like people people were gonna, you know, I'm talking suicide, you know, like it was a really bad day, and it was like a wake up call. Like the structure's not here. Like the structure for size is not here. Like something broke that day. And then I made this long video about it, how like I'm done with perps for a while. I'm just sitting on the back end. But for Segway, we've been working on this for over a year, and it like kind of it like goes into like why we're doing this, because there's a big problem in the space. It's a big equity problem. And I think that the equity anchor would be the resolution to a lot of the issues that we're seeing in this space, because when a $2 billion token like Aptos can drop in 85% in 1 second, like, and you have Pump Fund that has, you know, an amazing amount of revenue that's getting lapped by tokens that have never generated revenue. Like there's a problem here. Like we got a problem, and it needs to, like, we need to figure out a way to do it. So that's kind of how Segway came to pass, because this has been going on for a long time.
Sweet. Patrick, maybe a quick little background with you, and Howard will jump to you right after.
Morning. I started back in like 2012, 2013. I really got into some ETH mining and built them all from scratch and just started going forward. And then I got into like UI development and the user experience and how you build the dApps and how they interact. And I've just been in the tech world, just building things in the background ever since.
I'm kind of jealous. Where are you based at right now? It looks beautiful outside.
I'm in Los Angeles. I just kind of stepped out of the house to get some quiet time from the kids, and it's a nice like 72 degrees right now. Got the vest on for a chill morning. Got the birds chirping in the background. Nice little, you know.
I'm a Jays fan in Toronto, and last night was a painful game.
That was epic, right? Like,
Yeah,
what was it, 18
epic.
innings? Yeah, we took you home. Sorry about that.
Yeah, that's all right. That's all right.
Yep.
Sweet.
Wow.
And then the Dow King himself. What's going on?
Yeah, guys. I don't know if you guys watch my channel, but maybe not. But I have a couple of YouTube channels. I've been covering DeFi for a long time on YouTube and on X. And yeah, I've been in it for a minute. Before that, I had an internet company, which I sold in 2019. So I'm also a pretty heavy investor in real estate and other things. And a lot of the people I talk to, a lot of the internet companies that I know, this is how Segway kind of came around, was like, hey, we need help raising money, or we want to tokenize, and they don't really have the, you know, banks, VCs, it's not really an option for them. So, you know, myself, Lewis, Patrick started talking, and, you know, and Segway is here. I think it's the right time for something like this to be brought to the public, because there is an innumerable number of companies and real estate assets that want to go on chain. I mean, it's unbelievable, but they just don't know how to. Regulations, there's just so many problems. So, you know, kind of give you a little bit of a background.
He's being modest too. His ecom company did like $1 billion in sales. So don't let him.
Well, that was over like 20 years.
don't let him fool you either. He's being modest.
So it's not Dow King, it's Humble King.
Humble King.
Yeah,
Let's go.
he's being humble. Yeah.
You guys have been working on Segway for a year now. Is that what I heard, Trench?
Yep. Yeah. So we started building this, and the first route that we went, what we wanted to do is create like a universal multi-stack equity compliance layer that anyone can integrate, that any Web 2 or Web 3 project that is interested in offering equity in any venue or any avenue can do. And they can reach out and touch and be able to do that in a process. And we wanted to be able to automate it as best as we could. Obviously, you can't do all of it automation, but we've done it. And it was a hard road, because there's a lot of compliance, especially when it comes to the United States, because you can't build that kind of stuff in-house. It's extremely difficult. Like the 3 in our name actually has meaning. Okay. It stands for like the 3 main pillars of United States security compliance, right? You have a special purpose broker dealer, you have an alternative trading system, and you have a transfer agent. But there's also integration ability too, but we left that out because that's like kind of like, but that's what the 3 stands for. So like our actual ability to get all of those layers on our own was insane. And you're seeing like RWA chains launching that have raised $50 million, and they're having a hard time doing it, not because they can't afford it. Like it costs like, millions of dollars, but it takes time. It takes like 2 years or more to get all that compliance. So you see Ondo bought out Oasis Protocol because they have the ATS and they're on like the dealer broker track. So like that was a gigabrain move from Ondo to just like jump the line. You know what I mean? But there's not even a lot of options even to do that. Like, so for us, we had to look for a solution that could check all the boxes for us, that we could integrate and serve the United States. And that's how we came to T0. So there's only 2 options in the United States that have all the layers that we need for integration and all the compliance. That's Securities. It's backed by BlackRock. And they don't really care about equity or RWA that much. They just want TradFi vehicles. And then you have T0, and they love RWA and they love assets, and they loved us because we're multi-issuance partners. We're going to onboard. That's what we're going to do. So that's how that partnership came to pass. But that takes a lot of due diligence too. I mean, we have to register with the SEC. We have to go through full background checks. Like, it's not like, someone in a Milady can just get, like, it's like, you need to really lay it all out there, and they don't even really work with non-US companies. I mean, I'm not going to say they've probably never worked with a non-US company, but it's way harder. Let's put it that way. Like, they do not dick around when it comes to compliance. I mean, they just announced yesterday that they're going public. They're about to IPO. So, I mean, they're backed by the New York Stock Exchange and Overstock. So like they're just by the book, and that gave us our American exposure. Now we know we can tokenize in the United States, right? And for our international stack, we have a couple different solutions. A few I can't name yet because, we're still inking them a little bit. There's still some stuff to work out, but Bricken being the other one. Bricken is going to handle our integration stack for everywhere else. So everywhere else in the world, MiCA, if you have overseas exposure, that's who is going to integrate into our platform through that realm. So those two work together as a compliance layer to be able to do this. So that's kind of how we're able to offer equity for these existing tokens. And we're able to do it not only in Web 2, but like I said, Web 3. Like, for example, if you take like Dupe, for instance, right? I know Bobby's been really vocal about this because I follow along, and I heard him on the 11 a.m. show say, he's honest, he says it like it is. And, I respect him for that. He's honest. He's like, look, it's Fugazi. The token is Fugazi. Like, I know that. And if there's a way or a track that I could give ownership, I'll do it. But, he's doesn't know that, like, there is a track already and we have it. And he doesn't need to go on a permission chain either. He can do it in a way where he swaps his existing, attention token for an actual equity token that's tied to his business via compliant rails. So if Bobby ever sells his business or decides that he wants to share revenues, holders of this equity coin can just go and claim their revenues right from his DApp, fully built in and integrated through us. So it's not like you have to go on a permission chain. Now, there's some things that have to go on a permission chain. Like if you're a Web 2 company and you're raising from in the United States, right? Like if you're like looking to do a purely United States raise and you don't have an existing token, and you want to go like Reg D status, then yes, you have to be on a permission chain because you're not offering open tokens. Like you're not offering like swaps. All that equity is going to be sold out by the time you tokenize. So that's a different track. But for existing tokens, he could do that right now if he wanted to. Like the rails exist. So there's nothing really stopping him. I mean, it's just about whether or not he's willing to, because like, I think ICM is great. Like I'm all about it, but like, it's been great for companies, but it's not been so great for like the majority of holders. Like we know how to trade, like we're traders, right? Like we're trenchers. So we know the game, but like everybody else loses. And these companies are coming in and they're kind of rinsing us, dude. Like they come in, like some of it's vaporware, some of it's real, and then we believe in it. So we scoop up supply, and then all of a sudden they get some fees or they make a little money and they dump into the chart, and then like poof, they're gone. You know what I mean? Because the problem is their businesses are not reliant on Web3. Like if they succeed, they don't have to be like, oh, okay, here's your money, token holders. No. And I doubt anyone in Silicon Valley even is looking at their token. It's not tied to the company. And that's the problem that we have. There has to be an equity anchor, but it has to be done compliantly. Like you can't just break off United States equity without compliance. Like you're asking to get touched. I'm just putting it like that. So
getting pressed by the U.S. government is a whole vibe. I do have a bit of a question here. So for those that don't understand, T0 launched, they say on their website 2014, but I was actually around the Overstock days with Patrick Barn when he rolled T0 out. It was quite an innovative concept at the time. And if anyone does private checks, the process is normally you write a contract, you get physical shares, you go to computer shares, you then digitalize them, then they show up in your brokerage account. That's kind of like the typical flow. Within T0, I think I understand like why you partner with T0, but like just clarify the relationship between T0 and Segway. Are you guys bringing projects onto T0, or is T0 the underlying infrastructure? You had a lot of stuff in there, but I wanted to clarify.
Okay, so T0 is really mainly focused for the Web 2 exposure that we're going to have. That's where they come in very heavily. Like DK Aaron, he's really in charge of our Web 2 side. I mean, he has relationships with e-commerce businesses that do millions of dollars a year in revenue, tons of real estate throughout LA and Vegas. If you look, we even have 3 signed on issuers. If you go to the Get Started link, you can see some of those. However, T0 is integrated directly into our DApp for the onboard, not only the onboarding process, but also in the compliance process when it comes to like the necessary dealer broker relationship that you need in order to actually sell these securities, because it depends on what route you want to go. If these Web 2 companies simply want to fundraise, then tokenize, well, now you have to be on a permission chain because all those tokens are already assigned. They're already assigned to people, and they have to go to those people and they have to meet those security needs. However, if a project comes along that just simply wants to tokenize and leave it to the open market to buy their equities, they can go a different route, right? They don't need to fundraise through regulation exemptions, unless if they're going overseas, they can pair it. They can do a Reg S paired with like a Reg D 504, so they can serve United States and they can serve worldwide, and you're good to go at that point. But it has to be structured in the framework of the incorporations, and it has to be structured correctly in the framework in the deal, and it has to be handled by licensed individuals, not people, not us. So that's kind of how it works. They're like our compliance layer, more or less, built into our data. If that makes sense.
Let's check it out. So when it comes to other people doing this, like you had that conversation with Maya, who has been on the show earlier, and it seems like he's doing an equity model as well. What's the key difference between what you're doing, maybe something like debt issuance, which is what SOAR is doing, and then equity models like Street Foundation? What is like kind of your key differentiating factor here?
I'm going to try to say this without sounding like an asshole, but I don't really know how to do it. So I'm going to do my best. Okay.
Just shoot it, dude.
All right. Like there's real equity, and then everything else is just theater. Okay. Like that's just what it comes down to. Okay. He cannot offer equity in overseas from an overseas SPV. Like, let's just say Maya buys a company. He buys equity in the United States, right? From a startup. Okay. And he does, let's just say he actually frames it the right way and does a regulation S and register, gets all the compliance layers. Everyone, is on the books with the SEC, which is not what he's looking to do. But let's just say he did. Okay. He can't sell the equities. He can't market the equities. He can't do anything with those equities for a year. He can't even touch them. He can't transfer them. Okay. So if he creates a synthetic token, okay, and the token has the name of the brand, it's a securities offering because you're just going through proxy, and the SEC cares about form. They don't care about like the fact that you structured through a DAO. Like no legal language is going to protect that. So essentially you've started your company on, you've already violated, the rules of the SEC, but also now you've opened yourself up to multiple violations because you're talking about 170 companies, and you're structuring synthetic equity just by saying a disclaimer on your white paper. It's not going to protect you. It didn't protect Lofty either. Lofty just got sanctioned by California, and now the government's coming next because they tried to pull the same like under the table, roll the dice bullshit. And it just doesn't work. There's either equity offerings or non-equity offerings. There is no in between. Like, for example, if Bobby from Dupe wanted to do what I said he could do, okay, there's no free lunch with equity. Like, you'd have to take your Dupe token, go on his DApp, claim your equity token. You have to KYC for that, okay? Because there's no automatic like wallet layer where I can verify humanity. Like you cannot transfer equity right now at all without verification of humanity. Maybe one day we'll get there. Maybe 5-10 years, perhaps the rails will be built. But as of right now, there has to be a human layer. But what's cool about the swap model is the fact that, let's say Dom goes and takes his dupe and does the equity swap for the dupe share token, okay? He can transfer that token anywhere he wants. If enough people do it, they could start a liquidity pool if they wanted to. Now, private companies are only valuated once a year. So if you're trading like way above the valuation, and then like, a 940 gets filed and the filing the next year, and then like his valuation is a lot lower, the token will speculate probably lower. But like, what's cool is you got a year in between to speculate between it. But for example, if Dom sells his equity token, he can't go back and claim the revenue shares. If Bobby magically sells 10% of the company for if he sells it for $1 billion, the whole company, Dom can't go get his share of that 100 million anymore because he sold it. But the next guy who has the token can go back on the DApp, KYC, and show his ownership. But Dom only needs to KYC once and just buy more of the equity token, and now he's on the books for owning it. And we don't do the KYCs, just like Legion and Echo and every other IDO that's doing KYCs. Like, no one is the custodian of that information. That's illegal. That's got to be done compliantly through a KYC AML layer that we do not have access to. So keep that in mind too. Like, people get jammed with the whole KYC things. Like, oh, I got a KYC, but it's like, bro, like it's not stopping Kobe. It's not stopping Legion. It's not stopping any of the other IDO platforms. You've already KYC'd with every exchange imaginable. And now Bobby's offering you equity that you can trade or just speculate on. It's like, I would KYC for that 100% to be an owner of that company in a tradable token that I can sell. Like, there's got to be a trade-off.
So Trench, help me understand this here, because you said if enough people come together, they can create a liquidity pool, depending on how many tokens they have. So if there is no liquidity pool created, would I have to essentially OTC my equity tokens?
Well, you don't have to OTC. You don't have to do anything.
Sure.
The token is the equity. It's an equity assigned token.
Well, let's say there's no liquidation event. I want to sell my tokens. Would I have to OTC in that case?
Yes. Yes.
Okay. And would you guys facilitate that, or no?
It's up to the issuer. It's up to him. It's not up to us. We're simply.
Can I better? So like we have some companies. We have some companies that are like we're cool with a liquidity pool. and some are like, oh, we would prefer it to be traded like you guys said on an OTC. So it's going to depend on those companies that we're talking to. Like Keep Healthy, he's cool. He's like, I like the idea of having a liquidity pool. So it just depends on who it is. Other ones might not. Now, if you look at Lofty, when they issue their, I don't know even what it is, it's their token or whatever, and it's trading on their website, the value of it isn't very good. It doesn't really hold any value because they're not doing very much due diligence. So on this side, we're doing a lot of due diligence. We're making sure the real estate isn't like this subpar. I mean, Lofty has like, I mean, if you look at the real estate they offer, it's like literally broken down homes that need $50,000 or $100,000 worth of like work. It's insane. This is not something you can tokenize. You guys have to understand, like, there's a lot of people out here that don't understand like real estate, and you're selling them a $50 token in something. You're saying you're going to get 8%. That's all they're looking at. They're not looking at the facts. So that it's going to cost X amount of money to fix. It's going to cost X amount of money to operate. They don't have any of that. We're bringing you all of that. That's why Lofty and these other systems, once we launch and once we get a couple deals, it's going to revolutionize what's going on. It's going to be real transparency that you can see. This is the maintenance cost. This is the real cost. And the property we have on there is, you know, there's a tenant in there paying $60,000 a month in rent. So it's a completely different structure. You're going to get your money. You're going to get it every month. Their cap rates are there. The maintenance is there. This is what it is. This is the triple net. It's all transparent, and it has to be like that. And I haven't seen anyone do it like that, by the way. This is totally revolutionary for the space.
If you click on Get Started, you can see the three clients we've onboarded already. They're already 100% signed. So those are three, but those are three Web 2 offerings. We haven't even tried to even penetrate Web 3 yet. I mean, you don't need to be like an already existing Web 3 company like Dupe that would probably, I think Dupe would sell it out instantly, personally. Like if Kled were to do this, or Dupe, or a bigger project, I think it would sell out immediately. Because here's the thing, the utility token is redeemed for the asset, right? For the equity token. But you have to burn it out of existence because you're issuing the equity token. Now, these companies got a choice at that point. They could say, okay, well, I've made so much money from this, excuse my language, shit coin through fees and selling into the chart and all this stuff. I don't need to get paid for that portion of equity that I just gave away and got burned. But if they must take money for that equity, they could always take the one-to-one swap, burn it, and then pull that exact value from the liquidity pool. So everything is exactly the same. You took one token out, you took the value out of the liquidity pool, so nothing has changed. But I think that's kind of a dick move for the project to do, since they made so much money in fees from, like, you know, selling into the chart and all that stuff. I think they should let it go personally, but that's up to them. It's not up to us. We're just a facilitator and doing what you want us to do, right? That's all we're at. We're a compliance layer and a marketplace. That's it. But they
I got two questions then that kind of stem from that. Number one, obviously your big crux here is deal flow, right? You got to get these companies coming on and doing this with you guys. So number one, how do you look at deal flow right now? And then number two, we keep going back to Dupe and Bobby. You said, well, if Bobby wants to make his tokens equity right now, he can. Would that require him to put, or I mean, people can choose, of course, but would that be a one-to-one swap of equity to token, right? He's got 100% circulating tokens. I think he owns like 22 to 25%. How, or would he choose, hey, I'm going to sell 10% of my equity to this token holders who swap?
Right. It's up to him. He can delegate all of the conditions. So for instance, not a lot of people know this, but Hacken has done this already. Hacken did this in 2024. Okay. And they did it in like secret, but that's how we knew the model was possible, because they did it. They took, and you know, Hacken, right? One of the largest Web3 auditing companies like in the world. And they do like 30 to 50 million in revenue a year. They said, okay, we're going to take 10% of our company and we're going to do an equity swap. Same thing I'm talking about. And it got bought so fast that $3 million worth of the equity swap literally went to 12 holders.
Oh, geez.
12 people bought it all. Like, and I think that was some VC shit, which like was kind of like, come on, man. Like they probably bought it all, if you ask me, but they opened it to the public, and you decide how much equity you want to part with, and you decide how you want to fractionalize it. Like you can do it in X amount of shares against how many tokens you want. You can do equal value, or you can say, okay, you need 5 tokens for one equity token, or however you want to denominate it. It's up to you, really.
And can you touch on that deal flow again? What does that look like? Are you guys boots on the ground, evangelizing to each business, or like how does this look?
So Aaron DK is the Web 2 guy. He is plugged in very, very heavily across Southern California, pretty much nationwide when it comes to real estate. 100%. He's got access to unbelievably great brands in the Web 2 space. Whether or not they're going to tokenize 100% of their equity or the equity that they're offering, they may want to do a fundraise in Web 2. It depends on how they go. But no matter what, they have to pay us for our services. And we take services in their equity. So even though they might not do an offering like Bobby would do, we're going to have some to offer because we take supply on those deals. So like these 3 properties, they may fundraise, they may not. But either way, if they do, we're going to have 1 to 5% of supply of these RWAs that you could take the Segway token and actually swap for what's in our treasury. But once it's out of our treasury, that's it. Like you can't get any more unless it goes on the market for them. So that's Web 2, the Web 2 front facing part. Web 3, it's just about applying as much marketing as possible, creating a movement. Basically, my goal is to be like the Jimmy Hoffa of like tokenized equity, right? Like I want there to be like a union. Like it should be a union. Like we should come together to get this, because I think that it's only going to take one big token. One project is going to do an equity swap, and it's going to break the space. Because like think about all the ancillary benefits. Like your sentiment is turned upside down immediately. Like if you got bad sentiment, now you're a hero. Like you gave part of your company. Like who else is, no one else has ever done that. And it's just like, it would be an unbelievable narrative that would, I think, go far beyond even crypto Twitter. It would be a really big deal. And it would really set the precedent for all the other projects to do the same and start to give back ownership to the holders, because like some of these projects are making money, bro. Like there's no reason that Hyperliquid has to buy back and burn their token. That's artificial scarcity. They could instead take a portion of their equity and say, okay, we're going to offer an equity swap, and this is what we'll offer to you guys, and we'll cut back on the buybacks. So now you're not relying on artificial buy pressure, because a bear market comes, then what? What are you going to do with that? Like, you think they're going to buy back and burn the same way in a bear market that they're doing right now? No, they're going to scale that back. What it does is it gives this ICM is great, but it needs to be better for the holders and not for the companies. Like they get to issue this token and keep 100% of the company to leverage at will anytime they want. I mean, look at Padre. They only walked that back because they got pressure to do that. You know what I mean? They weren't going to offer shit. They were just going to sell to Pump Fund and be like, you know what? Whatever, guys, later. You know what I mean? And that's what we're trying to avoid. That's the problem. Like you should own this shit. And I think it's going to take one pioneer. Like we're not like, we don't build for product market fit. We build for the future. Like we build with vision, right? Like we're not going to release a predictions market because it's hot today. Like we're trying to be where the hockey puck is going, and I think equity is equity and ownership and internet capital markets is the next big meta, right? So why not add to the stack in real equity? That's my take.
What's your take on ownership coins? We've seen like the meta DAO concepts of the world. That's not necessarily that doesn't have anything to do with equity, but it does kind of give token holders ownership. What are your thoughts on them?
My thoughts on MetaDAO is I commend Profit for trying to protect holders. I will always commend somebody for trying to protect holders' interest. And I even commend Maya for trying to move towards ownership, because he's trying to construct something that maybe it has a lot of holes, but it can get there if he chooses to go compliantly. Like, I commend him for that. But the issue with like MetaDAO is that, like, as a founder, I can't make decisions on short-term price short-term price movements. Okay. Like, if you ask any of the top 100 builders in this space that have ever existed, ask them if they gave a shit about what their price was at any given time in their first 5 years of growth. What they will say 100%, we didn't even look at price. Okay. What if price was navigating Solana when it was $8? So it's like, I like it because it protects people, but I just don't know how it aligns founders for long-term success if every decision they make is commensurate with like a short-term price movement. That's my problem with it. Otherwise, and he's always tweaking it. He's really open to change, which I like about him a lot. Like, he's always adjusting and like acknowledging, like, okay, maybe this is wrong. This is that. And so I like that. I really like that about him. And I think he can get there. I just, for founders, it seems like a difficult model, man, because like, you just don't know what could happen. You're a startup founder. Like, shit can go wrong. Things can explode. You know what I mean? Like you guys run a startup, like, obviously we're not working with like machinery in the real world, and it's a lot easier to manage when it's just a dude in an office coding. But like, still, like, what if you got to make a critical hire, or money's got to go off chain sometimes? Like, it just seems like a bottleneck of an issue. But I do like, I'd say overall, it's cool. Overall, it's cool.
I want to talk about your token a little bit, because this is important. I'm trying to understand that model there. You said you charge a service fee, 1 to 5% of each company that comes through you guys. That then goes to a treasury, if I'm understanding correctly. And then you can use the Segway token, which I would imagine is tied to your equity in your company, to exchange for the equity in these companies.
Correct. So we'll have the same type of track. We'll have a utility token and we'll have an equity swap. So the utility token, we're still kind of massaging this a little bit, but as it stands right now, you'll be able to use our token to claim the equity of any asset that we hold on our marketplace. That'll be contingent on the deals that we make. So, you can white label the solution and put it on your dApp in your own marketplace, and you don't have to include us, whatever. But we want to be able to offer your offering on our dApp, where people can at least claim for the treasury portion that we have. And that's not the only way we make money either, by the way. That's just one of the areas. Like, I sent you a flywheel, slide. So we're not reliant on Web3 for revenues. I'll just be 100% blunt. A good portion of our revenues could very well come from Web2 as well, because fundraising in Web2 is expensive, and these are huge offerings. Some of these could be Reg Ds that, raise 10 or $20 million. And we're assuming all the cost for this. Like, we assume all the administrative cost. We're going to assume all of the marketing cost. We're a complete incubation hub, right? We're an engine. So basically, for us taking that enormous amount of risk, we're charging a success fee on that raise, which we're allowed to do. So that success fee is also part of our treasury as well, where people can claim that. So, for example, if there's a raise, I can't throw out an exact percent, but if there's a company that, we're spending, several $100,000 for their fundraise, we could take a success fee that's significant, and that would go immediately in our treasury for part of our revenue share. So the Web2 portion is we make money from the Web2 fundraise. right? Or Web3 fundraise, either or, right? If we're going to fundraise for you, we'll be like any ICO pad, right? So there's that. Then there's there's the actual marketplace, which is to trade and actually sell on the marketplace, right? There's a fee, the same there'd be like with any other RWA marketplace, like Lofty or anywhere else, right? We charge a percentage of the fee. And to list on the platform a small portion of tokens, right? We want Web3 on board. We're not going to like crush you, you know, and then there's obviously the third stream, which is the Web3 side of it, right? So we have the marketplace revenue, we have the Web3 onboarding, and then we have also the fundraising as well. And then we have there's another stream we're going to add to this, which is actually integration. So let's just say like Echo, for instance, wants to start offering actual equity. Well, they can take our stack and just basically put it right into their platform. And now Kobe can offer actual equity, and we can cross integrate any way we want. And I think that there'll be ICO platforms that'll jump at this. And the reason I believe that is because they're already on a compliance track. They already KYC you. They already have they're already on that track anyway. So they don't really even need to do anything extra to even implement this, right? They have to do, they're just offering an equity token as opposed to like a utility token. But like, it's the same type of KYC. Like there's no difference, right? It just has to be set up properly.
You guys mentioned you're out of pocket for a lot of this stuff. What does the team look like? I mean, you probably have a massive team of lawyers as well, and there's lots of lawyer fees. I don't know. What does that look like? Size? Yeah.
Aaron, you want to?
Well, I mean, we do have all the compliance parts, but that's also why Segway is also going to be doing a raise, because a lot of that compliance is going to cost us probably quite significantly. There is lawyers involved. Actually, the lawyer we had used to work for the SEC, so wow. We're covering ourselves correctly, and we're making sure we have the right people in place. But you know, to bring a project to tokenize the project in a legal compliant way, it's a process. It's going to cost some money, and then there's marketing. The marketing is going to cost some money. So that's why Segway needs to raise money. That's what we're going to do, and we're going to use those funds for the first couple of projects. And that's kind of the goal here.
Right. But like all the initial integration framework, all the legal, everything as far as like us being compliant was all out of pocket. So depending on what they're looking for us for scope, right? I mean, if they simply just want to tokenize on the marketplace and handle their own marketing, and they want to form the company structure, and they have a good lawyer, and they just want us to review it and just make sure everything's above board, then things cost less. But if you want us to hold your hand through the entire process, we'll do that too. We'll basically completely onboard you. We just ask that you just be cooperative, like give us the financials, like give us the incorporation documents, and just give us what we need, and then we can move. It doesn't take long to onboard at all, actually. Like you can.
How long is that process?
Not long at all. Every single offering is different. But let's say you were an offshore company, like let's say Dupe wanted to do this, right? I think they're under Carrot Card Incorporated, if I believe so. I think that's the parent company. I don't know if that's the DBA or the parent company, but he could do it if he wanted to. Obviously, he's from the United States. So the first thing we'd have to do is establish an SPV that would hold the equity, which would take a couple different exemptions. So he could also serve the United States, but he can actually start the sale as we're in the process. So it's not hard to onboard because we have these compliant layers. We have like the direct integration to these branches. So we don't have to like sit around and wait by mail or sit around and try to figure out exactly what we're missing, because we can streamline this information. We can streamline the data. So that's where we come from, like as far as like go to market speed. And that's why we are the fastest RWA go to market solution, because the fact is we handle all the compliance, and that's the worst, most annoying part of this. And as I mentioned, most of these RWA offerings don't even have the compliance. So they're like scattering right now, you know?
So I do have a question around this. Obviously, we've seen the SEC come out and make statements around like, hey, we think American entrepreneurs have spent way too much money and effort dealing with securities laws versus just being entrepreneurs. I wonder what your take is. I mean, obviously, nothing's been set in stone, I don't think, but these are kind of directionally interesting. Like, do you see that there's going to be just kind of a million flavors of these things that are just, you get out there? Are they going to create a whole new framework? Like, what are your comments on Paul Atkins' comments?
I think that the SEC, I think the Clarity Act is a great thing, but I don't think, like, don't expect miracles. Like, it's not going to make United States real estate, business, and assets not securities. Like, that's not going to change. Okay. What it's going to help with is identifying what token is a security and what isn't a security, right? Like, if you look at Ethereum, Ethereum's technically a non-for-profit foundation, right? But if I stake it, I can earn Ethereum. So it's like, well, am I making revenues? You're a nonprofit. That's like where the murkiness is, like in like existing frameworks. But like, as far as like when you cross into that equity boundary, I don't see them saying, okay, well, this isn't an equity anymore. Okay, like that's not going to change. What will change, I think, is clarity around the laws of, how to classify these tokens the right way. And I think what will change is the rails that are going to make our job like even faster and easier. Like, imagine if there was an oracle that was tied directly into like the California Real Estate Commission that could then look into the county department of record, then could also report to the government in one humanless function. Okay. That is what the future is going to bring. That is what I'm seeing is going to happen. And we're far from that. Like, that ain't happening anytime soon. Maybe 5 years or something. But again, as of right now, I think it's going to help with clarity. I just don't think it's going to like reclassify what a security is. But Aaron, what's your thoughts, man? I don't know.
It's hard to tell. I mean, you just kind of have to let these things play out at the end of the day. And also because there isn't 100% clarity on stuff, you get a lot of stuff like lofty. So you're going to see projects like this kind of just skirting the rules. And honestly, it's okay, because then you get to see how far you can push it. So we're going to get to see in the next probably year or two how far people are going to try to push this. And honestly, it's going to be fun to watch.
So what are you guys' thoughts on the market structure bill? We know that's coming up. Do you feel like that's going to affect anything? Is that going to affect the way you guys or maybe any players within ICM operate, or how companies tokenize?
I think the it's going to give a little bit more clarity, but I still don't think they're going to be addressing some of the issues that we're trying to address, just because they always seem to miss out details. So what you're going to see is you're going to see people just playing around with the rules and getting a little cutesy with it. And honestly, probably 9 out of 10 times, because this administration is so lax on a lot of stuff, probably going to get away with it realistically. But we'll see. I don't know. What do you think, Lou?
I think that if I remember correctly, and don't quote me exactly, but it's more towards like commodities, right? It's like, this is the thing that like people really don't grasp about like ownership and equity. Like, equities, like, it's a whole other thing. Like, I could go to Charles Schwab right now and like take a 2x loan on my stock portfolio because I have equity, or I could take a HELOC on my home. I would never do that, but equity is like a whole other classification, like commodities. What's a commodity? What isn't? Market structure. Yes. That, like, some clarity there. I don't know, but like company equity, it's not going to change. There's always going to be owners, right? If you guys have talked to VCs, I'm sure. Okay. Ask them what they want first above anything. Okay. Ask them that and ask honestly, okay, what do they want? Equity, okay? Equity. They're probably taking the equity and the token, but they want the equity first, okay? Because they know that the token has no correlation to how the company might perform in real life, okay? So again, back to the pump fund thing. There's no reason that pump fund shouldn't be a top 15 token right now. The miscorrelation is nonsensical. Like it's ridiculous. So they're like, you know what? We know that these tokens don't represent the value of the company. So get the equity first. First they get the equity, then they're like, yeah, we want the tokens too, because now I could double dip. And I'm not shitting on VCs. Like, we're talking to VCs. So it's like, I'm not shitting on it, but it's the truth. And ultimately, like, it's still risky to be a VC, like in Web 2 or Web 3, but like, Web 2 doesn't have that vehicle, right? It doesn't have a token vehicle. So like, if I invest in a startup in Web 2, like, I got to ride with you maybe for 3-4 years. I might not make a dime for a long time. But in Web 3, the company could die a lot faster, but like, yo, I got these tokens I can sell. Okay. Like I can invest this and just dump for the next 5 years, with these crazy ass valuations. So it's like, for me, I think that like, equity is the goal for them. It should be the goal for us too.
And to close that loop for what Trench is talking about, guys, we'll typically see these VCs literally buy equity from crypto projects rather than over buying the token. And so what Trench is saying here is, well, if VCs, if the real smart money is buying equity, why would anyone want to buy tokens, right? They're just the exit liquidity. They're the losers in the whole situation. So Trench is saying, change this whole thing, let them buy directly from equity. Interestingly enough, we're seeing a lot of liquid funds really lean into the ownership coins from MetaDAO. And I think it kind of shows the direction that liquid funds and venture really wants to head into. They weren't buying Believe tokens, or at least to my knowledge, they weren't buying Believe tokens, but they are buying, at least ownership coins. So the direction is clear there. Yeah, we're coming in on an hour. We want to respect your time, guys. We appreciate you talking. Maybe give us some.
Just on that real quick, I wonder to hear your thoughts, Trench, because Believe is really like changing their app and how they work a little bit. Do you have like feedback for Believe and how they can move to that direction a little better? Or is Believe cooked on ICM?
It's crazy because like, you minted more tokens, but you could have just gave the equity. You didn't have to mint the tokens. And it's a perfect thesis on everything we've talked about right now, right? I can issue this token that has no bearing on my company whatsoever. It doesn't lower the equity or value or revenue range, okay? But I can give equity. Like, no, I'm just going to do this because I get to keep everything, right? And I don't think that was I don't think that was a great look. Maybe he didn't think there was a path when I'm showing you that there is. But again, like, I think that like, delivery has been a problem for Pasternak. And let me tell you, I owned Pasternak when it was called Pasternak. I bought the token the day it launched and I held it for the entire time. So I believe, dude, I had it when it was called Pasternak. So like, I know the whole model. And I think that, Believe if we get a flywheel and maybe some type of actual ownership, equity ownership is involved, not Fugazi or like equity theater, but real equity. And he makes a bold move. It takes a bold move. And I think he could flip sentiment like that. I think if he did something like this, sky's the limit. Sky's the limit because now he's won back trust. So he's made a lot of money but it's money we're extracting that's being extracted from crypto natives, right? Retail never came back. So it's not healthy extraction. It's this
is a debate I really want to dig into. I want to have just like a big launchpad war and have you guys talk to Maya, you guys talk to Believe, and just see who kind of can hold their ground the best. I think that's something I might set up here.
Dude, we're not technically. I mean, here's the thing: like, we're not like technically trying to be a launch pad. Like, we're trying to work with anyone who wants to actually offer equity, right? Like if Legion tomorrow or Kobe's like, hey, I want to integrate with you guys. Well, we'll do that. Like we're launchpad agnostic. Like we could launch these assets. We could do that on our marketplace and we intend to, but like our goal is just to get equity to people like that, to the holders. That's it, just so you know, but I'll get on there.
Yeah,
But I feel like
some
it's still important to have like, just that varying opinion. I mean, you have a different perspective, you have a different viewpoint that you can bring to it. And yeah, you're not a launchpad technically, but I feel like a lot of people, they like ICM.run, where you might be familiar with those guys, they get compared to being a launchpad all the time. But I would venture to say that you guys are kind of a little bit similar. You're not a launch pad. You're just offering services to people that need it. That's really all it is. And in your case, it's centered around equity.
Yeah. And we're trying, ICM.run, I know from Stewed Home and I like the community that they're building. I think it's great. I mean, they could integrate with us. Like they could use our services. Like they don't need to have projects that even have a lick of revenue, right? They can do direct equity offerings instead of direct ICO offerings. So it's like, yeah, I mean, like I guess it's similar in ways. However, like we just maybe have like a little bit of a broader go to market, right? I mean, we're not like centered around like meme coin ecosystems, so to speak, I guess. But like we're here to take them from meme coins like to actual ownership, right? Like Dupe's a real company. Like Kled is looking like a real company. Like these are looking like actual real companies that aren't relying on Web3. So like
major growth companies too at that.
Dude, yeah, you want to own those. Like you want to get your hands on that. You know what I mean? Like that's the equity you want. Like, so again, it's gonna be interesting to see how things come out once we start really marketing and actually getting out there,
Well, I guess that's the next thing, right? I mean, what are you guys excited for? Like what's coming up for you guys? I think you mentioned it a little bit earlier in our conversation, but I just wanted to dive into that a little bit. What do you guys got coming?
Well, right now, I mean, we wanted to make sure that the stack was ready to go from day one. We didn't want to actually even stand anything up until it was ready to go. So we have that advantage where we can go to market immediately. However, we are doing a raise. So as far as the raise is concerned, we're speaking with a couple of very well-known ICO pads, and we're also speaking with VCs as well. But again, we're looking for alignment more than like check size, right? We want people that believe in the vision of what we're trying to do rather than like, oh, okay, like, like what's your product market fit? And like that term like irritates the shit out of me because like if you talk about like every builder that has ever done anything great in this space has never built for product market fit, right? He built for vision. Okay. He didn't build because there was anything there at that moment. He had a vision and he saw what could be instead of what is right in front of his face. Okay. Like when Poly Markets was being built 4 years ago, did anyone even know what a prediction market was? No, right. It was a vision. It was a vision. And that's what the best companies in this space have is they have a long-term vision and they don't try to just chase narratives, right? So like that's kind of what we're looking to be aligned with our vision and who we're looking to raise capital with. And as long as those things align, we're good. But that's kind of our stage. But we're going to start scaling marketing more AMA, more visual, more post, just educational articles, just trying to cross-pollinate communities and offer help where we can offer help. Like we're not going to try to like charge you crazy amounts of money so you can give equity to your community and to your projects. Like if ICM.run says to me tomorrow, like, yo, we want to do this. Okay, well, like let's do it as cheap as we possibly can so we can get this out there, right? So let's try to like figure out a path, like we want to grow as well, So
I guess like when is this kind of like initiative of marketing going to kick off? I mean, I know there's probably not too much that you can say, but I have the reason for the question is I have this thesis around just all these ICM players. I mean, I don't know if you see Soar, Street, You see Believe coming out with the flywheel. You see Dev Fund Pump and involved in the Pump Fund ICO pivot. So I just feel like just within the next few weeks in November, just there's a lot coming for ICM. And I'm seeing that you guys have something powerful to offer based on our conversation here today. And excellent conversation, by the way. So I mean, when can we expect something from you guys? You guys throwing your hat in the ring in November?
Yeah. I would say expect the marketing to start to scale probably by November. I mean, we are like figuring out the best path to go upon, like how we want to initiate the marketing. We're not hiring agencies. We're not doing paid KOL shills. Like, we want believers. We want people that want to have the same initiative as us. Like, we're not like your Solana rent a KOL. Like, it's not happening. Like, we want to, like we all know the deal. Like, we've all seen the price sheets. Like, it's just not going to happen. So like we're looking for like more cross pollination. Like we're with we're with the RWA Foundation, and they're partnered with Solana. They're partnered with some huge names, and we just talked to the head of the RWA Foundation, and, we're just trying to cross-pollinate where we can and, create as much organic community and knowledge around it. But we're definitely going to be looking to scale in November, I would say.
Man, I love to see that. I mean, going back to what Dow King mentioned earlier, it is going to be fun to watch all these things play out in parallel, because literally you don't know who's going to win. You don't know who's going to offer the best or what's going to gain traction. We don't even know what's going to come in the market structure bill. And my thing is like, that's going to be a huge pivot point for the market. So we don't know what's going to happen, but I just think that, this is just such an exciting time to be a fan of utility, right? And like that's what we've been focused on this show. We've been a fan of, who's offering something real, who's offering something that we can actually like get behind, that holders can feel aligned on and believe in. So that's what brought us to ICM. But I'm just so happy to see it evolve into this much more important conversation. And so many people have so many different takes. So, man, it's been a pleasure speaking to you guys today.
Pleasure's all ours, man. Thank you for having us. And if there's anything you need from us, we have channels. We would love to promote and help any way we can. And we're stoked to see what happens, man. We're really excited because, I mean, like even some of the products that got bailed on, they worked. You know what I mean? I don't know if you remember like some of the earlier Believe stuff, like some of that shit worked. Some of that shit worked. like the agent market, like the agent marketplace, like Dira, like that worked. I knew it was bullish. It just wasn't its time yet. That's why like it's like some of this stuff is cool and it'd be cool to be an owner of it. So we're excited.
Absolutely, man. Well, I'll tell you this. I know you guys are ramping up in November. If you you want to pop back in and share some news, we oftentimes find that sharing stuff direct with your community, live on stream where you can demo a piece of the website or drop some news, what have you. If you guys would love to come back, we'd be happy to have you, man. I know you guys are working on a lot of big things. So again, great conversation. This was mind-blowing. I'm not gonna lie.
This was awesome. No, this was awesome. Because like you guys are like me, like you have like the trenching and then you have like the ownership, like metas down, like you get it, like you guys get both of it. And that's how like I feel, you know what I mean? So it was perfect conversation.
Awesome. Appreciate you guys. Talk soon.
All right, man. Talk soon. See you.
All right. See you guys.